The live intraday price for TNL Mediagene stock, NASDAQ TNMG, is currently sitting at $0.5122, reflecting an enormous surge of approximately 70.96% in today's trading session as of 11:30 a.m. Eastern Time. This kind of explosive triple-digit percentage volatility, even in the sub-dollar price territory, is not just a daily swing. It's a direct, visceral reaction to a very specific, recent development that shifts the immediate risk profile of the entire company, and that's the core insight we need to focus on right now. The expectation for a stock that has traded down toward the bottom end of the Nasdaq's requirements, a stock that has seen its value erode dramatically from its previous highs, is usually more sideways movement or, frankly, further decline. The reality, however, is a sudden, high-volume spike, fueled by the news just 2 days ago. The company announced the complete repayment and retirement of its senior convertible note. This single action, which sounds like boring corporate housekeeping, is the unexpected catalyst that is driving this extreme volume, a massive $368 million traded in the session so far, and price jump. This move effectively removes a major source of potential market-driven dilution, a constant overhang that has been suppressing the share price. The market is cheering the simplification of the capital structure, seeing it as a clear signal that management is focused on business performance rather than constantly managing complex financing contingencies. This immediate expectation versus reality contrast, investors expecting a low volatility, low-priced stock to flounder, only to see it jump 70% on a capital structure announcement, is why you're seeing this stock all over the news feeds and why it's imperative to dig into what this truly means for the company's future. The common ground for most investors looking at TNL Mediagene is that it's a micro-cap media play in Asia, operating primarily in the Japan and Taiwan markets, and that it has been a deeply disappointing public holding since its de-SPAC transaction. Its 52-week range paints a stark picture, having fallen from highs near $20 to the low dollar handle territory. The prevailing narrative is one of a troubled foreign-based digital media company struggling for relevance and stability on a major U.S. exchange, evidenced by the fact that the company has recently been flagged for non-compliance with Nasdaq's minimum bid price requirement. This general belief sets a low bar, essentially baking in a high risk of failure or further operational disappointment. However, the contrarian take, the deeper reality, begins with that convertible note repayment. It signifies a crucial shift in financial strategy. In this price range, a major concern is always liquidity and dilution, especially from instruments where the conversion price and volume were determined at the option of the lender. Eliminating that instrument, as they have, means the company has taken proactive steps to protect existing shareholders from a mandatory market cap crushing influx of new shares at depressed prices. This move, coupled with reported improvements in operating margin and a narrowing net loss in their first half of fiscal year 2025 results, suggests that the underlying business, while still losing funds, is showing marginal improvements that are now allowed to breathe without the financial overhang. The market is suddenly pricing in the possibility of a simpler, less encumbered path toward break-even. While many retail investors focus on the immediate action of companies like Robinhood for quick trades or the stability of Fidelity's offerings for long-term investment, the dramatic swing in TNMG shows how significant a single technical financial announcement can be for a thinly traded micro-cap stock. Let's unpack the recent stock movement in detail. The trading volume today is astronomical, far exceeding the average daily volume, indicating an enormous amount of liquidity and trading activity that is almost certainly driven by algorithmic trading responding to the news, as well as retail speculation. This surge is not a slow, steady accumulation by institutional fidelity investments or a quiet repositioning by a major hedge fund. It is a classic relief rally combined with a high-frequency trading spike, often characteristic of low-float stocks reacting to a fundamental de-risking event. The price opened significantly higher and has fluctuated wildly, which speaks to a heavy battle between those trying to quickly profit from the news and those who might be shorting the stock and scrambling to cover their positions. A short squeeze scenario is entirely possible in this context, given the prior depressed price. This is a trading environment where using a sophisticated interactive brokers trading platform, which allows for fast execution, would be absolutely critical for professionals trying to navigate this volatility. For the average individual trying self-investing, this daily movement is too fast and speculative to rely on, but it certainly brings the stock back onto their radar. You have to consider the momentum in the context of the broader sector. The Asian digital media and advertising space is incredibly competitive, with a constant churn of brands and platforms, but it is also a sector benefiting from the long-term trend of digital ad spend migrating from traditional media. This macro tailwind provides a structural underpinning that supports the bullish reaction to the company's internal de-risking. The challenge for TNMG, even with this positive news, is maintaining momentum and demonstrating that the operational improvements seen in the first half of 2025, revenue growth of 5.7% year-over-year, driven by their technology and digital studio business units, and a narrowing of the net loss by 27.2%, are sustainable and a precursor to true profitability, not just a temporary bump. The fact that their revenue growth was partially offset by unfavorable Japanese yen movements also reminds us that investing in this company carries significant currency risk, which is often overlooked by casual investors simply looking at a massive daily percentage gain. This is where investors utilizing advanced online investment tools need to look past the ticker and understand the geographic and currency dynamics. Turning to the company's foundation, TNL Mediagene was created in May 2023 through the merger of Taiwan's The News Lens Co. and Japan's Mediagene Inc., positioning it as a cross-border, next-generation digital media and data group focusing on millennial and Gen Z audiences in Asia. Their business model is more diversified than a simple news site. It's structured around three core units: media and branded content, technology, and digital studio. The media side includes a portfolio of more than 25 digital media brands, such as The News Lens, Gizmodo Japan, and Business Insider Japan, covering news, business, technology, and lifestyle topics. This content generates traffic and, crucially, data, which is the feedstock for their technology and digital studio units. The technology unit leverages AI and big data analytics to offer data-driven marketing solutions, including AI-powered content management systems and display ad optimization tools. Their digital studio unit focuses on e-commerce, crowdfunding package services, and integrated marketing for agencies and clients. It's a vertically integrated model. Content draws the audience, data profiles the audience, and the technology studio units monetize them through targeted advertising, e-commerce, and bespoke marketing campaigns. Their fiscal year 2024 results, though showing a loss, demonstrated robust revenue growth of 35% to $48.5 million, with all three business units showing strong growth, which points to a successful strategy in integrating the merged entities. Historically, the challenge has been translating that top-line growth and impressive digital footprint into bottom-line profits, which is a common hurdle for digital media firms, even for massive names that are currently dominating the industry, such as NVIDIA stock's dominance in AI infrastructure being crucial for the back-end processing for many digital platforms. The market often gives a pass to growth-focused companies like Tesla for a period, but for microcaps, the runway is much shorter, and the need to achieve break-even is immediate, which is exactly what analysts are now anticipating for TNMG in 2026. The future outlook for TNL Mediagene is entirely framed by the market's renewed attention and the expectation that they can convert financial stability into operational success. The central expectation from the analyst community, with at least one major firm reiterating a speculative buy with a target price significantly above the current price, a staggering 174% upside potential mentioned in one report, is that the company will achieve profitability and hit break-even